Welcome to another episode of Market Watch. I am Shadir Jannat. For today's show, we have a special guest, Mr. Ray Abeyewardena. He is the newly appointed chairman of Colombo Stock Exchange. Mr. Abeyewardena has 30 years of experience, extensive experience in Sri Lankan capital market, primarily as a stockbroker since 2009 as an investment banker. He served on various subcommittees of Colombo Stock Exchange. He is also a past chairman of Colombo Stockbrokers Association. Mr. Abeyewardena, we are so pleased to have you today with us.
Thank you, Shadir. It's my pleasure to be on the show.
Mr. Abeyewardena, we have seen this market 2017 started with a negative territory, and now it has performed more than 7% positive, and also we have seen extensive foreign inflow, more than 16 billion LKR. So we know this is a young market, has so much of potential to grow. And to start initially, Mr. Abeyewardena, we know market capitalization to GDP is a very important indicator where most of the economists and the investors closely watch. So we know compared to regional markets, currently Sri Lanka market cap to GDP stands at 25%, where India we know it's around 72%, our regional markets, and Malaysia around 129%. So Ray, what can you talk about this going forward? How can we improve the size of the market?
It's a good question, Shadir, to start off with. The lack of market liquidity and the fact that market capitalization of our market has been small has been a concern that we have been faced with for a long time. We are very cognizant that, as you very rightly said, that Malaysia is at 72% of GDP of GDP market capitalization. India is over 100%, while Sri Lanka is 25%. And if you compare the GDP outputs of those countries, India is 1.6 trillion, Malaysia is 0.4 trillion. And if you compare Sri Lanka, our market capitalization is 19.2 billion. So you can see the anomaly if you look at it in that sense. Ours has and remains a small market. So we have to introduce initiatives of increasing the market capitalization by way of enticing, by way of encouraging, and by way of getting the state-owned enterprises, the SOEs, to get listed on the market. We also need to encourage the private companies to list, because if you look at the key drivers of the economy, primarily the apparel industry, we only have Texture Jerseys as a listed company, whereas the bigger contributors to our GDP output are not listed. Significant government entities like the airlines, the petroleum, the state or other key state-owned enterprises are also not listed. When I talk of listings, what we are saying, Shadir, is that we don't need to list control, or we don't need to give away control. We are talking of small stakes, 5 to 10% of that can be listed. Then the entire market capitalization will increase significantly.
Also, Mr. Abeyewardena, we know Sri Lanka is classified as a frontier market right now, and we know our regional markets, Pakistan of course, they are going to be reclassified as into the emerging market index. So we know as the upgrade would create a meaningful opportunity for capital appreciation, and also active investors recognize the improving market condition and stability acknowledged by the MSCI. So this gives some backup for the market. So from that context, Mr. Abeyewardena, going forward, how we can see to reclassify our Sri Lankan market into emerging market from frontier, and what are the initiatives we need to go forward?
The advantage of being classified as an emerging market instead of a frontier market that we are right now is that for fund managers who critically track the MSCI, we will become a part that they will need to invest in. So which means that there will be more interest that will be focused on Sri Lanka, and there will be more investments that will come into. But for us to get listed or to be cited in the MSCI index, there are criteria that needs to be fulfilled, Shahid. And market capitalization, our volumes, our sizes is one critical element that we need to comply with or we need to fulfill. The other aspect, of course, is that when you get on to something like the emerging markets, or when you get into classified as into the MSCI index, we will become a smaller entity, because there are larger entities in the market, as we spoke of larger markets as well. So the investment percentage will be small.
Yeah.
So whilst we remain as a frontier market, we still have a lot of opportunity where we can grow this market.
Okay, okay, that's interesting. And also, Ray, if we see most of the, I mean, foreign investors, they need more transparency when it comes to investing. I mean, when it comes to our listed companies, what do you think about the level of disclosure? I mean, is it at satisfactory level where we need these things to be more transparent, then we can attract more foreign investors comfortably?
I think in that aspect, I must tell you, Shahid, that we have a very well regulated market.
Yeah.
We have very good disclosure requirements. We have set very high standards over the last decade or so in terms of market disclosure. Although we are a small market, I think in terms of our disclosure requirements, in terms of how we get about regulating the market, I think the standards are very high and we maintain. We have not had any complaints in that nature saying that our disclosure, that people are staying away because our disclosure requirements are not good, but because I think we try to maintain, or we try to keep ourselves with ISO standards. Okay. In that aspect. So I would actually say that we are not short, or we are not found wanting. Okay. In that aspect of it, and our companies are good. They do disclose things on time, and they do follow, because we also continuously monitor, and we ensure that they do comply with the requirements on a timely basis.
And also another important factor to attract these foreign investors, I think CAC has done extensive amount of roadshows previously, and recently they did the Invest SL forum in Sydney and Melbourne, and we have seen quite a lot of improvement from the Australian inflows. We are in last 11 month daily average from 0.87 million LCAR, it has gone up to 23.2 million, which is a very good improvement from the Australian inflow. So Ray, what do you think going forward, what are the destinations we can target, and this is very effective, this strategy we can see. So what do you think about these road shows, and how do you feel this strategy we can take forward?
So Shahir, we have had we continue to have road shows regardless of what the market conditions were. That's As right. You know, that year 2015 and 16 the markets were not good in here. Volumes were low, index was continuously declining, and it's in the last couple of weeks, as you said, that we have seen sizable turnovers, market overall improving, and we have seen steady inflows as well. Yeah. So one critical aspect, or one aspect that you could link it to, as you said, is the Australia, the Sydney, Melbourne road shows, which have demonstrated an increase in investments from those countries which were hitherto not there.
True.
I think from about a 14 in the ranking of investments coming in, they have risen to 7 within a very short spate of time. So that's very heartening. What we have continuously done is we have covered certain countries which we feel will attract more fund managers. That has been Singapore, London, New York and Hong Kong. What we will now endeavor to do is to continue to target those markets on a regular basis, to target fund managers in those markets, to hold road shows on a regular basis. Of course, we need to phase it out so that we don't sort of bore them by going to them too often, and also seek new markets. Could be Japan, it could be China, it could be the Middle East. So whilst we continue with our standard road shows, we also should try to bring in new markets.
Yeah.
And explore. It's a chicken and egg situation. I mean, we need to have the funds to attract, to go out there and to market ourselves, But at the same time, if we don't do that, the fund investments don't come in. So we need to have a balance of that. But we are continuing our marketing endeavors.
That would be interesting, Mr. So also, Ray, I mean, we have compared to the foreign investors, another important participant group is our local investors, and we know high net worth investor, retailer groups. So there are institutional investors. So from the local context, I mean, the local investors, we have seen compared to the overall eligible investor group, the participation is very less. So going forward, Ray, what are the strategies to entice this crowd to improve the participation? Because we know CAC has been conducting town seminars, and they are doing so much of educational programs. What do you think about this model? Will this be more effective? Is there any change in this strategy, or any new initiative you can talk about here?
It's a very holistic thing that needs to happen, Shahir. If you look at, I mean, the CSC, as you very rightly said, we continue having market awareness programs. They do town visiting, they do regional, they cover many areas throughout the year. It's a continuous awareness program that we do.
True.
Whilst we concentrate on the foreign road shows intermittently, I must tell you that the local thing takes place continuously. But what we need to do, remember, Shahir, when you buy a stock, it's very different to any other product that you will buy. You're buying something on expected future earnings.
That's right.
You may look at past earnings, but there is no guarantee. It's not. It doesn't compare. You cannot compare it with a fixed deposit, because it will say, I guarantee you this amount of return. It doesn't compare with a treasury bill or a treasury bond, which will say, I guarantee you this.
That's right.
This is something that you buy on future earnings. It's on expectations. So there has to be investor confidence that has to be in the market. People must be confident that the price that they pay is acceptable, that they are paying a good price.
That's right.
So I think what we need to do is, whilst we focus on these awareness programs, we also need to target the more discerning investors, those who are more knowledgeable, with greater or better quality research reports. We need to look at the more sophisticated investor and sort of encourage them to come into the market. Because if you classify the retail investor, we have always seen those that go merely on sentiment, whereas there is the segment that go on research driven. They will be more discerning, they will study, and they will follow the market in a more methodical manner than the retail investor who will look at it purely on sentiment. So we need to drive a balance, because you need both the retail, the investor who will go on sentiment, and you need the investor who will look at markets, study markets. So we need to target those markets as well, and we need to create a market which is stable.
Yeah.
We need to give them the confidence that this is a market in which you know that you are getting into, and you're buying stocks at a good rate. So you're getting a good value for money in that. So that's the onus is on us to create.
I can totally agree with you, Ray, because that's very important. The investor discipline, the understanding of the markets, as you said, not only through sentiment, through fundamental, technicals, combined together, there should be disciplined investors with a savvy investment knowledge. True. And also, Ray, I mean, we spoke about this now, about the investor, the financial literacy they should have. Now we know there are other new products we can introduce to the market, short selling, options, derivatives. There are so much of developments we can bring forward. So what do you think, Ray? I mean, is our capital market ready for these products, or do we have to go for another long run for these, or like what is your idea on this?
Our market has remained, sadly, an only equity market. I mean, that's the reality. And in that, if you see, there are only a few stocks which are attractive to the foreign investor. So primarily, it has been driven on a couple of stocks that investors have been looking at.
That's right.
And the index goes up and down depending on how many how those particular stocks have fared. We need to create more products. We need to bring in things like DVP, which is delivery versus payment. We need to introduce a CPP, which is a clearing system, counterparty clearing system, central counterparty, CCP, to provide the platform on which we can introduce these new products. Right now, I mean, if you say the market is being, if you can talk of, people used to talk of these pumps and dumps and things like that. If there was a counter mechanism where people could short, for example, if you are running the market, because it's a small market, it's an illiquid market, if people wanted at certain periods, you could run the market. If you ran the market, if I took a contrarian view and said that you are running this market and it is overpriced, I can always short.
That's right.
So you bring in a market mechanism to control that. Market forces will take care of that. You try to run the price, I see that it is overpriced, I will short. So we need to bring in short selling. We also need to bring in other products like derivatives. For that, we need to have primarily a CCP.
Okay.
And we also need to bring in delivery versus payment, which is very important from a foreign client's perspective, because they need to have the confidence that when they buy the stock, that the stock is delivered on time. So those are some measures that we need. That also will enhance market liquidity. This will also provide other instruments for people to trade in. I think we must be one of a very small, we must be one of the markets, few markets that don't provide other, that we singularly remain an equity market.
So interesting, Ray. I mean, as you said, so we need to bring on these platforms to facilitate this product. So from what do you think, is there an initiative taken?
There are. The SEC and the CSC jointly are looking at the CCP, the central counterparty system, because we need to provide that platform so that some party takes care of settling it. So the risk is then taken care of by a third party to provide us the platform on which we can then provide this. So initiatives are underway. My hope and my fervent hope is that we can introduce these things quickly and create or provide a new market for these instruments.
Okay. Also, Ray, I mean, we know government's role when it comes to this capital markets, a major cogwheel in our financial, the overall economy. So, from your perspective, what kind of support do you expect from the government to take this market forward? All our discussion, we wanted to bring this to attract more foreigners, local investors. What kind of role they play here?
Shahid, the government is a key stakeholder in the stock market. You cannot look at a stock market without government support. As much as you would have the investors, you would have the broking community, you would have the stock exchange, the Securities and Exchange Commission. The role of the government is imperative. We need that support, and I can tell you this very clearly, that we need the support of the government to, if we are to drive this market further. I must tell you in that context that the Minister of Finance has been very supportive.
Okay.
He set up a meeting recently where he called key stakeholders. We discussed certain initiatives, we discussed what we could do. That is very heartening. We saw, as a result, the markets also continuing to strengthen thereafter. He called me when I was appointed as chairman last week. He was in Tokyo attending the finance ministers conference, and he after wishing me said, let's meet again, and wanted me to set up a meeting as quickly as possible. So we get that drive is coming.
Okay.
And it's very heartening when we have that support. We know that will help us to take the market to, because there are certain things that we cannot clear, which we need the government's intervention to clear. So that support is needed. Also, as I said, the listing of SOEs will be strictly a government initiative, which we greatly look forward to.
That's great. So we hope all this government support to continue and take our capital market forward. Thank you so much for joining us
My
Ray,
pleasure,
today.
Sahil.
And we hope to see you soon in another episode to discuss more exciting capital market developments. And we wish you all the very best. And for our beloved investors, we will see you soon next week with another episode. Until then, take care.